Over the last few days, a lot has happened within the banking industry in the United States, and it's not hyperbolic to say that none of it is good. We have just witnessed the collapse of the second largest bank in American history, a bank run that will likely impact over $100 billion worth of assets and a stock price collapse of over 60% in just a few hours. The legacy media is reporting on this, but reluctantly, and their narrative is clear. Don't worry, there's no problem here. Please look away and keep giving us your money. And in the meanwhile, the super wealthy of the world are running for the doors, trampling over anyone in their way. We literally just witnessed the first bank run in this financial crisis, but believe me, it will not be the last. Silicon Valley Bank was uniquely positioned to bear this collapse before the rest, but the problems it suffered are seen from all over the country and even the world. If you watch just one video today from the beginning to the end, let it be this one, because you need to know exactly what has just happened and crucially why. And if you're only just hearing about this, then you need to sign up to my free newsletter Stoic Markets. My newsletter subscribers already know everything that happened because I was able to send out an email explaining everything that very same day, whereas with YouTube it always takes a few days minimum to get a video produced and released. But just what the hell is actually going on then? Well, we'll start with who Silicon Valley Bank are. They are a very well established bank in Silicon Valley, unsurprisingly, and they've existed for about 40 years at this point, so they aren't exactly newcomers. And they aren't small either. They controlled over $211 billion in assets, made an income of almost $2 billion a year, and the bank itself was valued at $16 billion. They are, or I should say were, the 21st largest bank in the United States and had 8,500 employees in countries all over the world. Unsurprisingly, they focused their core business on Silicon Valley, on tech companies, and in particular, those very same tech companies that have lost trillions of dollars of value over the last year. In fact, 44% of all venture-backed tech companies in the US banked with Silicon Valley Bank, including huge names like Shopify and CrowdStrike. A huge amount of their customer deposits is the cash that these hyped-up tech companies got from VCs, so when the bull market was in full swing, this bank was booming, growing, and pulling in the cash, but that all started to change when the bear market begun. Now, you may not have heard of Silicon Valley Bank a week ago, but that does not mean they were a small fish. They were just niche. And of course, as you probably know at this point, the bank is now dead, it's bankrupt, it's defunct, and it no longer exists. All of this happened really over the course of just 2 days, so let me tell you exactly what happened and why this bank collapsed, and why it seemed to come out of nowhere to so many. So why did it collapse, and why did this seem to come out of nowhere with no warning or market crash to actually trigger their failure? Well, Silicon Valley Bank was investing tens of billions of dollars into US treasuries to try and earn some money on their deposits. Usually this is a very safe thing to do. The bonds are incredibly unlikely to default. You get a fixed income, not necessarily a huge one, but a strong one nonetheless. And usually it doesn't actually matter if the market values of those treasuries fall because the banks aren't forced to record their paper losses. So if they just hold their securities until maturity, they will be totally fine. The problem is that bond prices have crashed by a ridiculous degree recently. TLT, for instance, is an ETF that tracks the price of US treasuries, and it's fallen in value by over 40% the last couple years. And Silicon Valley Bank found itself in a tough position. The companies they work with, these hyped up tech firms, found it more difficult to raise cash in a tighter monetary environment, and so they stopped depositing money with SVB and started withdrawing it instead. SVB had no option but to sell some of their assets to stop a bank run from happening, and so on March the 8th, they sold $21 billion worth of securities at a loss of $1.8 billion. They had to sell their assets at a loss, so suddenly those paper losses became very real. The bank also decided it needed more cash to ensure another problem like this wouldn't occur, so they decided to sell $2.25 billion worth of shares, but this was just too much for their investors to stomach. The writing was on the wall, and so these massive venture capital firms like the Founders Fund contacted all the tech companies that worked with them and SVB, and they told them to pull their money out. The bank run broke out in full swing, and every single depositor suddenly found themselves sprinting for the door doors, desperate to get out first, but of course, this just made the problem so much worse. The market starts to hear about this, and investors of the bank itself pull their money out too, leading to the stock price of this $16 billion bank dropping by 60% in one single day. Just 12 hours later, and the bank realized it was all over. There was no point in even trying to raise more cash. It was dead, and US banking regulators knocked on the door and shut the entire thing down. And just like that, over the course of about one day, we witnessed the second largest bank run and bankruptcy of an American bank in history. Suddenly though, people realized that SVB isn't the only bank in the world, and this bad news for one bank means there's likely bad news for others out there too. On the 9th of March, the day this really all kicked off, JP Morgan and Goldman Sachs lost 6% of their value and Bank of America lost 7%, but the fear wasn't even just contained to US stocks. Banks all over Europe and the rest of the world saw their share prices drop too. HSBC was down by 5% and Barclays were down by 4% too. Focus has already shifted. No one really cares about SVB anymore. It's dead and it's not coming back. The thing we're all desperate to know is what's next. Are other banks going to follow? Are we going to see more bank runs? And is this the start of another global financial crisis? Maybe even, is this a Lehman moment? The reality is we should be on the lookout for contagion here, and I will release more emails out to my newsletter over the coming days and even another few videos on this very topic explaining exactly what contagion we might see and why all these other banks aren't as secure as they might seem. We're going to go in depth on Silvergate, another bank that just collapsed in the US but that didn't reach as many headlines, as well as how JP Morgan themselves may have even helped the CEO of SVB sell his shares and escape this sinking ship over the last few months, of course at the expense of their very own investors. With issues like this, corruption is always rife, and I'm spending every waking moment these days trying to work out exactly what is going on and exposing the truth to my viewers, but the only way I can guarantee that you know what's happening is if you sign up for Stoic Markets with the link down below in the description. If you're watching this and wondering how you can possibly protect yourself, the most important thing is to ensure that you don't have more than $250,000, £85,000 or 100,000 euros in any one bank. If you hold any more than that amount, if your bank collapses, you will lose it all. These banks are not your friends. They are businesses dedicated to squeezing out every single penny they possibly can, and they won't hesitate to screw you over if it means saving themselves even $1. 97% of the deposits at SVB were above that $250,000 number, which means 97% of the capital that was just lost will not be reimbursed by the government because it is not insured at all. That is billions of losses that will never be able to be replaced, and it's also worth noting that smaller, more niche banks are more at risk of times like this. The larger the bank, usually speaking, the more diversified it is, so if one part of their business does fall apart like what happened with SVB, hopefully the rest of the bank business can pick up the losses and stop collapse. The truth is though, there is no easy way to know which bank is next, whether or not your money is safe. I will do all I can to ensure that you stay up to date though. Please also be very careful listening to talking head pundits like Jim Cramer. We all remember what he said about Bear Stearns back just a few days before it collapsed. He told everyone not to take your money out because it's safe. He said it's the strongest and safest bank in the world. Now he is running around saying similar stuff today. Regarding SVB in particular, he said the market was overreacting when its share price fell by 60% and that drop was unwarranted, and then literally not even 10 hours later the bank had collapsed. If you're only finding out exactly what happened right now and what to look out for next right now, then you need to sign up for my free newsletter Stoic Markets. It is 100% free, and I can write a summary of what's going on in the world within just a few hours, whereas it takes days for me to put a video out onto YouTube. As a result of this, those who have signed up for Stoic Markets knew exactly what happened ages ago, and they knew how to protect themselves too and what to look out for in the future. If you're a regular viewer of the channel, then you've probably noticed now I have paid a lot of attention to the banking sector over the last couple of months, and obviously that was for good reason. This bank run and collapse proves that things are not going as well as the media would have you believe. There are trillions of dollars of debt hidden off balance sheets, just like the hidden losses that finally took SVB down. If you want to learn how to identify these trends before they happen so you can not only protect yourself but even make money from these sorts of events, then you need to check out Stoic Financial Freedom, my new course. We've recently just put out a more condensed and focused version of the course specifically tailored to viewers of the channel and at a massive discount to the full price, so click the link down below for Stoic Financial Freedom. Or if you just want to see how gold might be another canary in the coal mine, then watch this video here.